Anuj Puri, co-founder and chairman of Anarock, to speak more about it. Anuj, very good morning to you. Just let's start with some of the highlights of that report that I spoke about very briefly in the introduction.
Good morning, Tamanna. Always a pleasure to be on your and Neeraj's show. Interesting year 2025. When it started, we thought that the volumes would actually exceed 2024. And we were a little bit surprised when we added up everything to see is that the volumes were lower than 2024, 14%. Having said that, as you rightly said, is that the price rise has happened at 6%. Just to give you a little bit more color around it, the reason for the volumes to have gone down is because the affordable housing supply hasn't really hit the market at all. As a result of which, the volume numbers have gone down because largely affordable housing adds the volume numbers, the number of units sold. What has been selling is luxury, ultra luxury, and premium. As a result of which, the sales value has gone up. Otherwise, it looks very contradictory statements that the number of units sold were lesser than 2024, yet the price has gone up or the sales values have gone up by 6%. That's the reason is that affordable housing hasn't really hit the market. And the reason that it hasn't hit the market is it's very difficult for the developers to be able to bring affordable housing at 40 lakh rupees or low per unit, given the land prices, given the construction costs that are there. And I do feel is that somewhere in the government quarters, there is a thinking that they'll need to revise the definition from 40 lakhs to perhaps 70 lakhs so that there are more developers who are being able to do the affordable housing.
No, but in terms of a trend, Anuj, you spoke, of course, broadly on all of those findings, but in terms of a trend and especially the volumes going down, some of the reasons mentioned are not looking like they're going to change anytime soon, especially IT layoffs, geopolitical concerns. All of those will continue to impact volumes, you think, going into 2026?
There are four things, Tamanna, which are impacting. One is geopolitical. Definitely, there is, sensitivity around that. Is perhaps something to do with the AI in the tech sector. That is not yet played out fully. I think the two major things that are contributing to slackness in the number of volumes of units sold. One is that the land prices have become very high. As a result of which we're continuing to see the price rise happening. And the second is that the construction cost has gone up, as a result of which, the prices have gone up. But there are a few tailwinds as well. The home loan rates have continued to come down. The economy continues to do pretty well. The demand for residential sector still continues to remain strong. And I'm going to contradict myself, Tamanna. Whilst we are saying is that there are layoffs in the IT sector, the office sector in 2025 was the best ever since the independence of India. So, there is a bit of a contradiction on one side. We're finding that AI is disrupting the IT sector and there are likely to be layoffs. Yet on the other hand, the gross leasing of offices in 2025 in the last 75 years was the best ever at 80 million square feet. So whilst there is a disruption coming in from AI, but I think the global capability centers are fulfilling that shortfall by coming into India and setting up their offices.
Good morning, Anuj. Hiral on this side. An interesting point that you make right now is clearly the growth is coming in when it comes to commercial real estate. The slack is in residential real estate. Now, we were just doing a check in terms of how the first half has been versus the second half as well. And usually the trend has been that launches in the second half of the financial year is when they pick up. The first half of the second half is already done now. The third quarter is already done. And the concern was that the pre-sales growth that did come in was mainly led by sustenance of sales versus new launches. Is that still a concern right now? Because that will help us understand what's happening in real estate. Are there further launches expected?
Certainly, we're hoping that Q4 is a strong Q4. A lot of the launches that we had predicted were going to come in Q3, which was the festival season, actually didn't come in. We're hoping that that slackness will get picked up in the Q4 of this financial year. And if that doesn't happen, then a lot of the listed companies' guidance that they have given may not come true. But I do feel is the way that the developers are energized, the way that they're preparing for the marketing, the launches are set to come in Q4. One other thing that I would, Hiral, want to point out in this is we're finding that consolidation in the real estate sector, particularly in the developers, is happening very quickly. So, the large are becoming larger. Certainly, the ones who are listed are, eating somebody else's lunch. And we're seeing that the aggregation, the consolidation before COVID, the total contribution of the leading developers to the sales used to be 17%. At the end of this year, it has gone up to 40%. So, clearly, whilst the market may slow down a little bit, but I do feel is if the launches come through in Q4, the listed companies would disproportionately benefit.
Anuj, good morning, Neeraj here, and I reciprocate. It's always a pleasure talking to you. My question is, if indeed the expected numbers at the mid-housing didn't quite turn up in 2025, and I heard you say that it will come in Q4, but if I look at a 5-year pipeline, could the fear of supply, which might plague prices lower, get postponed to an extent almost every quarter and thereby every year, and therefore could pricing behavior be a bit better, both in affordable as well as in luxury?
I think it's a very important point, Neeraj. What you make is that, is there a thought that the supply will hit the market in large quantities and hence have a negative impact on the prices? So Neeraj, the way the developer community has behaved, I mean, I do give them a thumbs up on this occasion. I've been in the sector for 30 years. I haven't seen the way that they have so beautifully behaved this time over the last 4 or 5 years. They haven't necessarily increased the prices to the extent that they had to because of the increase in the construction cost. So there has been a fine balance between greed and fear this time, Neeraj. So the 7-8% price rise that we are seeing is largely because the commodity prices have gone up, construction cost has gone up, and some part is also the land cost. So whilst we're saying is that the prices may come down, they will need to pass this additional cost of construction to the home buyer. The second part of your question is that if there was a large supply that was to hit the market almost simultaneously, would it have a pressure on the pricing? Certainly, it will have a pressure on the pricing. My thought is that this supply, Neeraj, whilst on paper it is coming up, that it can all come up in one go, will actually even out, largely in the MMR region because of the society redevelopment. I mean, what actually happens and what's given on paper, there's a difference between hitting of that supply by 4 to 6 quarters. So I do feel is that it'll even out. Whilst on paper it does look like that there is a lot of supply, but because largely it is coming from society redevelopment, because the way that the societies behave, it will even out.
Anuj, just very quickly, one last question from mine at least. I know you're not an equity analyst, but which set of developers do you think have got the strategies straight for growth to be predictable for the next 3-4 years? Because that's what equity markets will reward. Are the MMR developers? Is it the Gurgaon-based developers? Is it South-based developers?
So clearly North has very little, Neeraj. There are no more than 2 or 3 guys that I would say is that market has superbly consolidated in the hands of 2 or 3, and they will do an exceptional job. Bangalore developers have been always leading in terms of their integrity, in terms of the debt to equity ratio, delivery, quality. So I would feel is that they will continue to do well. I think where the sales values are going to come in is from the listed MMR developers. So that's the way that I would classify these 3 regions.
Got it. Okay. Anuj, wishing you and Team Anarock a fabulous 2026. Have a great celebration, and thank you so much for speaking to us today.
Thank you very much, Neeraj. Thanks. Bye.
All right.